Hello, everyone. This is Paul with Black Edge Trading. Please subscribe and like this video um, about the algorithm. In this video, we're going to look at the overall market, the S&P 500. Earlier, there was a question posted in the Discord, and someone asked me on my Instagram page, Black Edge Trading page, how do you swing trade and how do you swing trade options? So we're going to look at the overall market, and I'm going to talk about swing trading. I'm going to talk about where the market is now, and I'm also show you how I swing trade options. So first, let me answer that question. How do you swing trade? So I use an institutional trading strategy called supply and demand. And basically, supply and demand works in any kind of market. It just identifies where the institutional buyers and the institutional sellers are, because they're the ones that move the market. If you want to be profitable, you need to understand where they're buying and where they're selling at, because they're the only ones who have enough purchasing power to move price up or down. So once you understand that, you go out to a weekly time frame. You can look at a 4-hour time frame, but I really wouldn't go lower than that. If you're thinking about doing a swing trade, because unlike a day trade, a swing trade, it takes multiple days. It's not happening intraday, so I would really look at a 4-hour time frame and up, depending on how the company moves. That's another thing you need to know. How does this company move? Does this company move from 4-hour supply to 4-hour supply in a day? Or does it, move maybe from a 1 hour to a 1 hour? Stuff like Tesla, it'll move like from a 4-hour to 4-hour. The XPX, it'll move from a 4-hour to a 4-hour, or from a weekly to a weekly in one day. Things like Nvidia, Microsoft, how they're moving right now, they'll move from a 4-hour to a 4-hour in one day. So once you understand that, you mark out the zones, and then you wait till the zone gets down to a level and it tests, and you say, okay, we've hit this 3, 8, 10 level several times on a 4-hour time frame, on a weekly time frame. It takes, each one of these candles is a week, so it takes 1, 2, 3, 4 weeks to hit the top of that zone. So I need to buy time and a half. If you're buying option contracts, you always want to buy time and a half. If it's going to take 4 weeks for you to hit your target, you want to buy at least 4 weeks plus half. So that'd be 6 weeks. You want to buy 6 weeks worth of time. So you would buy what's that, 45 days, by the 45-day contracts, or by the 60 contracts, nothing less than that. And basically what you would do is you would just, when it comes down in this demand, you get you a good entry and have your stop below the demand zone where the trade is no longer valid, and you take the trade up to supply. In the short time, while you're in the trade, you check it, and you can play short-term put options against the trade to hedge your bet, or you can, day trade to hedge out any risk that you would have, but always be an active investor and watch your position. And the same thing on the put side. If we get up here and I see we can't move higher, and I see this is supply, I can say, okay, it takes, 1, 2, 3, 4, 5 weeks to move down. So the next time we come up here and test, I want to play puts, targeting my demand zone down here where we've had support at. I want to play puts, and I know it took 5 weeks last time, so I want to buy a time and a half. I'm going to buy 5 weeks at least, plus 2.5. So we're looking at 7.5 weeks, or maybe 8 weeks for this trade to take place. And so I go out and I find option contracts that are 8 weeks out. And I say, okay, this is 8 weeks out. I get the contracts. And also, I don't have to get at the money contracts. I can get at this strike price contract. So if the price was up here and we're trading for it to go down, it's at 41.97, and we're trading for it to go down to 3,800. I can buy the 3,800 8-week puts. On this trade, we're trading for it to go up here. I can buy the 41.97 calls for the appropriate time and a half. So if it's 4 weeks up, I can buy the 4197 calls for 6 weeks out. And that's how you swing trade options. And or if you're buying shares, you do the same thing. You put your stop below the structure, below the supply zone where the trade is no longer valid. And you put your take profit up here at whatever price you want. And that's basically how you swing trade options. But let me show you another thing I do. So this is what I do at the beginning of the year. I go to NetTools and I type in a company. Like, let's say if I type in Apple, it's one of the most common companies that everybody has in their portfolio. So I go to Apple, I look at their 10-year history. I scroll down and it'll tell me Apple has a return of 30%. Okay? So 30.42%. So let's go back to, let's look at Apple. Let's go back to January of this year. Apple was at, let's just say 130. All right, so we got Apple at 130. Give me a second. Let me get my calculator. We got Apple at 130, and we should gain 30% by the end of the year. So I would say 130 times 30%. That's $39. Okay, so 130 plus $39, 169. So by the end of the year, Apple should be at $169 if it returns its 30% that it's supposed to turn annually. And we found that out on NetSeals, that it said Apple returned 30% annually. We came to the 10-year history. We found that information out. Sorry, I went too far. It says it returns 30.42%. All right, so we got that information out. So we found out annual return would be 30.42% right here. So once we got that information, at January We find out where Apple is, and we say, boom, Apple's supposed to give me 30% this year. Add 30% onto the current price, so that would give us 169, and then take 10% of that, which is 16.9, and subtract that from 169. So we should have a price of 152. Okay, and I took that 10% because the market normally has a 10% pullback, or these stocks will have a 10% pullback each year at some point. So like right here, this may have been like that 10% pullback. So at the beginning of the year, I had a price target of 152 for Apple. So let's say by a year's time, Apple should be at 152. So how would I buy option contracts to get gains that year? So I would go out, if I think Apple will be at 152 in a year, because that's what it annual returns, 30% minus, and you add that 30% on top of Apple's current price, and then you subtract 10% for a pullback. And I go and look at the call options on Apple at 152 at the beginning of the year when it's at 130. And then I say I need a year plus half. So I would buy the 1 year, 6 months. So I go past a year on the options chain, and I would look at, so if we're in January, I know the next June should be a year and a half. So June 2024 will be in a year and a half. Or July 2024 will be a year and a half. And I buy the 152 call options a year and a half out. And even though we have exceeded that expectation, if I bought in January, that's basically how you play long-term options on these tech companies. You just do that. You buy these long-term call options a year and a half out, or sometimes people buy 2 years out. And in the meantime, they'll hedge their position by every quarter with short-term puts. So if I buy a long position, I may buy the 3 month or the quarter, which is March, June, and then you'll have another quarter, October. You have another quarter in January. So they buy those contracts for puts. So they'll buy like a put contract. They'll say, okay, I got a long position that's 2 years out, or I got a long position a year and a half out. I'm going to buy these 3 month out of the money puts just in case we have a pullback. They're cheap, but they're insurance against any kind of pullback in your long-term position. And I hope you guys understand it. If you don't, I'll try to explain it more in the Discord. But that's just something that I wanted to share with you guys. That's how I play long-term options, and that's also how you the statement before I was talking about swing trading. I explained that. Now, I want to talk about the overall market. So let's go back and look. We see Apple passed its 3-year high already. And I want to look at XPX because I had a question today about the overall market. So, knowing that Apple's way past its 1 year return rate. And the XPX is 200 points off of its um, all-time high. When interest rates were low, I'm not entering any long positions right now. I'm just doing a lot of trading. I entered my long positions back here in March. Um, in March, when we had some bullish activity and we got above this previous area of resistance, and the downtrend that we were in. Let me show you guys. We were in this downtrend right here. It broke in March. We broke it in March and then we retested it. So this was the original downtrend. In March, we got above here and we retested it. And on this retest, this is when I entered my long positions. So we're in a new trend right now up to the high. And I'm just holding my long positions until this trend breaks, or until maybe if inflation is beat, we can, continue in this trend. But I'm pretty sure up here we're going to have some selling activity or maybe a pullback. But I'm not entering any long positions. I entered my long positions in March. So I'm not entering any long positions right now. And that's why it's a lot of, trading information in here that's going on in the Discord. Because, it's kind of too late. If you missed it, as an investor, you have to be patient. You don't just want to be in the market. You don't want to just let these companies borrow your money just to say I own this stock or whatever. You want to be making profits all the time. So you don't, as an investor, you have to be an active investor. The years of being a passive investor is over. Too many people know information about the stock market. Yes, in the long term, over a 30-year period, you may come out, but why not come out even better being an active investor? Why just, if you're going to be in the stock market and you're going to put your money there, you check your bank account every week. You know what your bank account balance is. Check out your stocks. What are you invested in? What's going on with these companies? And if you stay up to date with these companies in the news, and you've done your analysis on these companies, or you've done your analysis on the overall market, you're just processing new data. It's not that hard. Just like you guys keep up with, the news or all the stories that are coming out, and you know what happened with this, celebrity or whatever. Just keep up with this information. And that's why, you get to the point where you only invest in a certain amount of companies. You may probably need 10 to 20 companies in your portfolio. You don't need all of these other companies. You shouldn't have, 50 companies in your portfolio. There's no way you can keep up with what 50 companies are doing. And if you have 50 companies in your portfolio, then majority of it's probably speculative. You take the top companies out of the Dow, you take the top companies out of the S&P 500, and you take the top companies out of the NASDAQ. And then maybe you have a couple speculation companies in there, maybe some good companies out of the Russell 2000, stuff like that. But, that's what you have to focus on in these portfolios. I know a lot of people who started investing during this period of time, COVID, they thought this market was, this great place where it only goes up, and these gurus kept telling you buy the dips and buy the dips and stuff like that. This was an easy market to learn in. When every time we had a dip or a pullback, the market was going up. You could just buy calls and everybody was making all the money off of options and stuff. But this was a once in a lifetime opportunity when you had almost 0% interest rates. You had the government handing out money. You had unemployment money, people getting paid more to be unemployed than they were being paid to be employed. You had the whole PPP loan scandal going on where everybody had some LLC and they filed PPP loans. A lot of that money went into the market. You had all these gurus come out and say, hey, I know how to invest, I know how to trade. And you guys know the whole time while you guys were in the Discord with me, I was like, the market don't move like this. Like, we've moved more in this period from March 20 up to December of 2021 than we moved from, if you look back here, and from 2016, we moved more in that year and a half than we moved from 2016 to where the current market was. Look how steep this is. Markets don't do 90-degree angles. So I'm just telling you guys, as a person who's seen many markets, that's not how the market moves. And you can get focused on these rallies and stuff, but it could end up like this. Like, this is the whole bull run. The market sold off from levels it was at in 2020 all the way back down to levels it was at in 2016, and then recovered all of that in a span of 2 months, and then surpassed that when everybody was unemployed and businesses were shut down. But you know, overall market, we're 200 points off of the high. So I'm not in any other long positions. We have interest rates at 5%, and the Fed threatening to maybe have one more interest rate raise. Just be cautious and always check and see what the market is doing, what the VIX is doing, because at any moment we could have a downturn. So just watch this. Hope this was helpful, you guys. Check us out at Black Edge Trading on Instagram. We got a new page. We're trying to get some followers. We have courses available on trading. We have courses for beginners that teach them what the stock market is, how to trade shares and options in the stock market. We also have a more complex courses like mastering supply and demand trading, which is what institutions use to trade. We also have a course on investing and portfolio management that'll teach you what I do, how I portfolio manage professionally, tricks of the trade. We also have coaching available with myself or DoorDash. So you guys can just check us out. Also, we have a free Discord. So once you purchase the courses, you can come in the Discord, and throughout the day I'm answering questions. If you guys have any questions or want to follow along with our trades, we're in live chat every day. I post a pre-market. We talk about what we're looking at, why we're looking at it, what the levels are. Sometimes I'll even say put your stop loss here, put your entry here, and then we get into the live chat if you have time to trade, and we trade these companies. And it's just a lot of like-minded individuals. A lot of them are learning. A lot of them have learned, and they can share some of their experiences with you. But just check us out, and don't forget to like and subscribe. And I hope this was helpful. And I hope you guys have a good day.